Think about this stat for a minute. About 1 in 5 Americans have now used crypto or tried it in some way, and that number is growing very quickly. That's a massive constituent. Let's, come up with a reasonable test. Is it a commodity like Bitcoin or Ethereum? Well, that can be regulated by the CFTC. Is it a security where someone's raising money for their company? Well, then it can be regulated by the SEC. Is it a currency like a stable coin or something? That can be regulated by the Treasury or someone like that. Or is it something totally different we haven't thought of, artwork and metaverse and gaming and NFTs and decentralized identity? Let's probably not regulate those as financial services. That should be something else.
ARK Invest CEO Cathie Wood and Brian Armstrong, the CEO of Coinbase, have recently given their thoughts on the future of the cryptocurrency space. Wood explains that though there are still a lot of regulatory uncertainties plaguing the crypto space, it is not stopping certain institutional investors from investing massively in the space. However, despite recent huge crypto-related announcements from multinationals like Fidelity, BlackRock, and Goldman Sachs, Wood declares that institutional adoption has been rather slow. She also describes a new era where institutions like ARK Invest are not just asset managers but are deeply involved in the governance of the assets they hold, such as the great potential of decentralized protocols and assets. In the interview with Milken Global Institute Conference, Wood and Armstrong proved their worth as industry leaders and revolutionary thinkers. This is a video you do not want to miss. So ensure you watch the video to the end, hit the like button, and drop your comments and observations in the comment section below. Thanks, and enjoy the video. Let's begin with Cathie Wood's comment on the most recent wave of institutional investors in the crypto space. Here's what the fund edge manager has to say on the issue.
I actually think it's been rather slow. I think retail has been way ahead of the game, right? And I think one of the reasons regulation uncertainty around that is one. But I also think we're going to end up with different financial institutions where, as an asset manager right now, I just hold assets. In this new world, to be an asset manager, we're going to have to be power users, right? When involved in governance, in validation, in staking, in lending. So I think institutions are trying to figure out, okay, what is this? Now, when it comes to Bitcoin, that's somewhat more simple right now, at least. So that's one thing. ARK. The way we set ourselves up, we're all about transparency. Most financial institutions are not. In fact, the middlemen have gained a lot of economic incentives from the opacity. So transparent, we're democratized, we're focused on disruptive innovation, that's all we're focused on. We're focused on the convergences between and among technologies. Most institutions are not set up this way, and so I think, there's a little bit of a rethink going on. What is this? How do we adapt to this new world? But if you were to ask them, I would say the regulatory uncertainty. When we saw Mass Mutual take their first position, $100 million, a couple of years ago, we were very encouraged. Think about everything. They had to go through 50 state regulators, my guess is, to get that done. But I think another thing happened right before that was Cambridge Associates' first report basically said, okay, you may not like this when you delve into it, but you have to delve into it. This is a new asset class, and you have to have a point of view. And as I understand it, again, learned this last week, Cambridge is going to now put out a more comprehensive set of reports to guide institutions.
So, Cathie, you mentioned retail adoption sort of led in this space, and now we've seen, as I mentioned at the beginning, Fidelity's announced they're going to allow customers to put Bitcoin into their 401ks. Do you see this as a positive development?
Oh, definitely. Yes. And, Abby Johnson has been mining Bitcoin, I think, since, 2014, I think, or maybe 13. So she is the CEO of Fidelity, so she's leading this charge. I think that's an important breakthrough. I also think, as Brian mentioned, enabling employees to direct deposit their paychecks into Coinbase, or I know Robinhood and Square each have the same, a certain percentage each month going into cryptocurrencies. I think that's a very interesting, and I know a lot of our employees are doing that. So again, though, it's bubbling up. I think there's a grassroots effort here, I think, and it's employees. It's a little bit like in the early days of Apple. You know, we always thought chief technology officer determines everything. In the old days, all of a sudden, Apple came out with the iPhone, and even the CEO and the CFO and all of the employees wanted it. It's the same thing. This is bubbling up, the employees asking, and it's part of talent retention too.
Wood also talks about the issue of regulatory clarity as regards the crypto space in the United States. She explains that while other countries are making huge strides in their bid to regulate the space, the situation has been completely different with the United States Securities and Exchange Commission and other regulatory bodies. Unlike Wood, Armstrong seems to be more positive about the development of appropriate regulatory policies in the United States. Please listen to both explanations and let us know who you think is closer to the mark.
Oh, I would have expected more clarity. The only clarity we've gotten so far, and it wasn't from Chairman Gensler or under him at the SEC, is that Bitcoin is not a security. And I'd love to. I know you were at the SEC. Was it for 5 years, perhaps,
yes.
Mike?
Yes. Thanks for reminding me. Yes.
I'd love to get your point of view. I'm wondering. Nothing has happened except perhaps shutting down Lend for Coinbase. You know, basically they've come at this from a negative point of view, and I'm seeing other countries come at it from a positive point of view. And if we're not lucky, regulatory arbitrage is going to take this market away from us. This would be, you know, when I started looking at Bitcoin, it was 2000 for our funds. 2015, I went to a confab where there were regulators and lawyers, and at that time I said, okay, no regulator wants to be blamed for missing the next big thing here. And that was right in the sense of how much they stayed at bay. And so we invested in Bitcoin when it was $250. Pretty sure that regulation, there was more clarity to me then just reading the body language of these people than there is now.
Let's go with Brian. Brian, I'd love to get your point of view on this.
Well, I agree with Cathie. There could be more clarity. I think there's cause for optimism though as well. And one thing is that in Biden's recent executive order, they did ask various departments of the government in the U.S. to come back and say we need clarity on this industry. But it was very positive to see them also mention that we need to protect the innovation potential of this technology because this represents a huge opportunity where we want to preserve this in the United States. That was really positive. Another really positive thing I've seen is that when I do spend time in DC, I think this is a very bipartisan issue. There's people on both sides of the aisle who are very pro-crypto, and I would even say the majority of people who I meet with in Congress now, 50% or more, are pro-crypto. They believe in this is a net good for society. Yes, it needs to be regulated, but and then it's actually getting harder and harder to meet a true crypto skeptic in DC. I think we still get sometimes the questions about, well, isn't this just used for illicit purposes? Well, no, it turns out that's a tiny fraction of what happens in crypto, and it's actually much more traceable than something like cash. People ask me about, doesn't this just use a lot of electricity and destroy the environment? Well, it does use electricity, but electricity can be generated in a green way or not a green way, and the industry is moving to things like proof of stake, which are even more energy efficient. So there's a lot of education to do, but think about this stat for a minute. About 1 in 5 Americans have now used crypto or tried it in some way, and that number is growing very quickly. That's a massive constituent. It's a massive voting group, right? There's much smaller constituencies in the United States who have changed elections than 20%, and that number will probably be 40%, right, in a few years. And so it's quickly becoming politically very unpopular to be anti-crypto. Everybody who I talk to basically agrees now that this industry is here to stay. The question is, can we regulate it in a thoughtful way that actually preserves the innovation? We want to have sandbox environments, de minimis thresholds for startups to get off the ground without having to pay $10 million in legal fees. And then as they get bigger, let's come up with a reasonable test. Is this a Is it a commodity like Bitcoin or Ethereum? Well, that can be regulated by the CFTC. Is it a security where someone's raising money for their company? Well, then it can be regulated by the SEC. Is it a currency like a stable coin or something? That can be regulated by the Treasury or someone like that. Or is it something totally different we haven't thought of, artwork and metaverse and gaming and NFTs and decentralized identity? Let's probably not regulate those as financial services. That should be something else. And so it kind of reminds me of the early days of the internet. In 1996, they had the Telecommunications Act. And President Clinton signed that into office. And was it perfect? No, but it did preserve the innovation potential of the internet. That's what we need to do with this industry. It's following a growth curve, much like the early days of the internet in the late 90s.
ARK Invest's CEO speaks further about her fears concerning regulatory policies for the digital assets space in the United States. She mentions that she is especially worried that when they finally come fully on board, regulators will focus on the development of central bank digital currencies. We know some of the dangers attached to those. Here's Wood's explanation.
I agree on causes for optimism, but I also want to worry, just because we should. And we've witnessed 2 countries so far where the regulators get on board, the policymakers get on board, and at the end of the day, what is it about? It's about CBDCs. So that's China, and then very recently, is Mexico, and the only reason I'm focused on as an investor, okay, what could go wrong here? Mexico is doing the same thing. There were everything crypto. Senator from Monterrey, heard her at one of the conferences recently, Crypto Raw. She goes back, and it's all about CBDC. So it's like, wow, that's our largest trading partner, and why are they doing that? So I don't want to be paranoid, but I want to be appropriately, I want to ask those questions, and I've been asking them here, and I'm very pleased that a lot of those in Washington who are thinking about the risks are asking that question. Is this all about a CBDC and that's all? I don't think so. I think the US, this is the next generation internet. One last thing. The regulators, or the policymakers, I think, to the extent we have them thinking about this in terms of this is technology, this is next generation internet, it is much easier than those, and these would be more on the progressive Elizabeth Warrens, who are looking at this from a financial services point of view and have all of a sudden now I think banks are fine. She was banging on them for so long. Now she's picking crypto, so it's an interesting twist.
One heads the world's second largest cryptocurrency exchange. The other has continuously shared her beliefs about cryptocurrencies and other disruptive technologies. Both Armstrong and Wood are industry leaders with in-depth knowledge of the cryptocurrency industry, and they have presented both sides of the regulatory coin. Which do you think is more accurate? Wood's observation that the regulators are sitting on the sidelines, which could shift the market's focus away from the US, or Armstrong's more optimistic approach? Please drop your comments in the comments section below. Also, remember to hit the like button and subscribe to the channel. Thanks for watching.